Well, it certainly hasn't been boring this week. Volatility has increased quite substantially. It's been a case of a couple of percent up, a couple of percent down. The end result actually has been a gain of just under 1%, and as we can see there today, quite a nice high close. So we are still on track to attain our target area, which consists of the typical retracement zone, which also shows confluence with the next zone of resistance or line of resistance, circa 5,000. And if we do reject at these higher levels, then we will be looking for another leg lower, very similar to the one down from the high of wave C to the previous pivot low, and that would take us down toward this next zone of support, circa 4,400, which again shows confluence with this larger degree, 50 to 61.8% retracement zone. So in terms of our wave count, nothing changes, running on track. We've definitely seen an impulsive movement down from these highs. That completes either wave 1 or A, and if we do get that symmetrical looking ABC correction higher and see rejection at these slightly higher levels around 5,000, then we would be looking for that larger degree wave C to continue down and hit this larger degree typical retracement zone as well, and then potentially look for signs of demand and a buying opportunity, a good buying opportunity at these slightly lower levels. So this is the type of pattern that we're looking for, bigger picture. Now the other pattern of interest during our last review was some type A bullish divergence. So as we can see, price made a lower low. Our divergence oscillator failed to confirm by making a higher low. Now as we can see, it hasn't quite unwound into the overbought position. A couple of more strong sessions and that certainly will be the case. So the ideal situation is for our indicator to rotate into this higher band, coinciding with price hitting this typical retracement zone, and if that is seen, then certainly every chance from there that we are going to see weakness again, and looking for rotation, as I've said earlier, down toward this 4,400 region. Now the other pattern of interest is actually the volume, which isn't shown on this particular chart. In fact, let's just do that now. So we'll get rid of our divergence oscillator and then take a look at the volume. There we go. Okay, so there's the volume there. Now the thing to take away from this chart is the volume decreasing over the past few days. That's certainly been the case. We can see here volume quite high, ultra high volume, and again here, but it certainly subsided substantially during the latest bounce, and that is very indicative of a lack of buyer demand. Doesn't mean to say we can't rotate into our target area, but if this volume remains low as we do continue to head higher, that would certainly add weight to the bearish case in expecting another probe to the downside. So volume, very important. It is starting to wane, and that really is aligning with our wave count in suspecting that the current bounce is going to run out of steam pretty quickly.